rewatch any of this, go on my YouTube, and I'll have that posted. So, so we're just gonna start. I guess we're gonna start 3 minutes early. I guess. So today we're putting the most of the stuff that we learned together. There's still a few concepts and stuff that I haven't taught yet, but this is the majority of it. So day 3, putting it all together. So the first thing I want to go over real quick is my 2025 roadmap. This is so basically the last month. So December is going to be, I'm going to try to get enough classes in to where you guys will be ready for 2026. So today is obviously daily bias. Next week is continuations on how to trade continuations, why I personally think continuations are better than reversals. And then, the week after that is understanding risk, taking partials, and how to trade or stop loss. And then at the end is going to be trader psychology, and then also goal setting and prep for 2026. So as you can see, Saturdays are mostly lecture days, and then Sundays are more like free days where we can do more in-depth studies, or we can answer any questions that you guys may have. So, and then 2026, how to build a model from scratch series. That's basically going to teach you how to put together your own model, and that one's going to be kind of hard to teach because it's not easy to give you all step by step on how to build your own models, rather than just copy and pasting a model that you find off the internet. But I'll try to do my best on how I put together my model, and what YouTubers I watched, and what I did, and some universal principles of all models that that everyone should know. So we're just going to go over mostly daily bias today. That's why I called it putting it together, because daily bias is probably the last key that a lot of y'all need. So we're just going to get straight into it. So daily bias really comes down to 3 different things for me: the weekly power of 3, the daily power of 3, and order flow. So these 2 are very similar, based off of opening prices, right? That's what we talked about. The first 2 classes is opening prices. We want to see a run above or below the opening price, and then give us a confirmation, and then we trade away from it. So we go accumulation, manipulation, and then distribution. We want to be in that distribution phase. So yeah, and then order flow, right? This is very common sense. If we're bullish, we should be respecting bullish PDRAs. So we should be respecting fair value gaps, right? We should be respecting order blocks, bullish order blocks, right? And then we want to be disrespecting bearish PDRAs. So we want to see sell-side imbalances be inverse. And then we want to be buying below lows, which are turtle soups, right? Trap those breakout traders, and then it's vice versa for the bearish people. So reversal sequence. So this is literally how every single reversal forms, and how every single reversal happens, right? So the 3 I mostly focus on is key level. So price must sweep liquidity or fill in a balance, right? So this is what it represents here. We sweep liquidity here, right? This is a swing low. We sweep it, right? And then the first telltale sign of a reversal is an inversion fair value gap. As we have said, in bullish or bearish order flow, we want to see their respective imbalances be respected. So if we were bearish, this inversion fair value gap should not have gone inverse. It should have stayed as a bearish fair value gap, and we should have moved lower in respect to this. So that is the first telltale sign of the inversion of us reversing. And what I mean by large manipulation leg is when we have such a big series of down closed candles like this, our change in the state delivery is so high that I would rather just use the inversion fair value gap, because by the time that we get the inversion fair value gap, most of the move's already over, right? Or we're going to get less of the move. So this is obviously the more risky approach rather than a change in state delivery. But if we have a large manipulation like this, I will just take the inversion, because if I take the inversion here, sure, I'll be in some drawdown here, but I'll still be getting more, and I'll be able to target these relative equal highs, all this generated liquidity up here. But that's something that you guys have to kind of figure out yourself. Are you a more risk trader, right? Do you want to get in early and go for the higher risk to reward, or do you want to be less risky and wait for the change of state delivery? And then additional confirmation, the SMT, right? Let's just say that this is NQ. Let's just say ES did not take out this low. That would be SMT. Breaker, right? This is the highest probability PD array. This is also another part of the reversal sequence. We usually see a breaker when we get the change in state, right? But sometimes you don't get the retest of the change in state delivery, right? But you do get the retest of the breaker, so that's something that you guys should study, is that sometimes we don't get the retest into the OR block, but we do get the retest of the breaker, right? So personally, I just enter when we get the change in state delivery or the inversion fair value gap. So the breaker doesn't really matter too much for me because it is probably the last major PD array that forms within the reversal. Of course, always at key opening times and at key time-based levels, NWOG, org, and NDOG. That's what we talked about. And last thing we want to see is major displacement. After these big candles, right, we know that smart money's position, right, because smart money has so much money that when they do enter the market, it creates large gaps and just big candles in general, right? So the weekly profiles, I'm going to go through like the ones, and then I'll give y'all like an easy way to, you don't have to memorize like, oh, is this a classic expansion week? Is this like a midweek reversal? No, just understand the principle of, us manipulating above or below the opening price and tagging into a key level, creating that reversal sequence, and for us to trade that distribution high, right? So Monday high or low of the week. This is a very rare occurrence, which actually it's funny because it did happen recently, I believe. I can show you that. It's going to be an example that I have. It is actually, most of the time only happens when Friday puts in the reversal so like the previous week, Friday puts in reversal, and then the next week is continuation. Or sometimes what happens is that Wednesday manipulates Tuesday's like high, for example, and then we move lower. So if we have established, if we have a protected high during Wednesday, but Monday's high is obviously higher than that, that's still a Monday classic expansion week, right? So it's either Friday puts in the reversal or we have a protected daily high or low on a later day that's not as high or low as it, right? And then Tuesday high low week, this is the most classic. We take Monday's low and then we get that reversal signature on the 1 hour time frame. So 1 hour key level or higher. I prefer a 4 hour above, but the 1 hour does work. And then we get the 1 hour change of state. So that's your classic expansion week, right? Next thing is the midweek reversal, right? Ideally, the ideal profile is obviously a classic expansion week because we get more bullish price action. Midweek reversal, there's no clear ranges, right? We have smaller ranges on Monday and Tuesday, and then there's no clear reversal on either of those 2 days. So Wednesday gives us a reversal signature. This usually happens because we don't have any high impact news on Monday or Tuesday, and then Wednesday is the majority or is the first major red folder news, right? Red folder news usually dictates which daily profile that weekly profile that we have, right? It's very unlikely for, let's just say, Tuesday to be high or low of the week if it has no red folder news, but then we have like FOMC on Wednesday, right? And then the last thing is classic, is the consolidation Thursday reversal. They're very rare, usually because, again, there's no red folder news until Thursday. Price consolidates Monday through Wednesday, and then Thursday runs out the low. This profile kind of sucks because it only gives you like really one high probability day, which is obviously on Friday, right? So this is not the profile you want to see, but it's still a profile nonetheless. So obviously the last thing is TGIF, thank guys Friday. It is a very counter trend idea. Basically what we're looking at is that wick of that weekly candle forms. So the requirements of it is higher low of the week must be put on a Monday or Tuesday. We must have the largest displacement away from that protected swing, and we must be at some PD array. And we target 20 to 30% of the weekly range so far. So I will show you what that looks like because we did actually have it this week. We did actually have a TGIF play this week, so I will show you that once we're done. So confirming daily bias, right? So far our daily bias has been mostly based off of the weekly profile, right? So now we're going to get into the daily profile and how we can confirm that, right? So characteristics of true protected swings, right? The weekly high or low is always a protected swing. If any single weekly candle has expansion from its high or low, that's just basic candlestick analogy. How protected swings actually protected? Well, protected swings are reinforced by each other. So when you have one protected swing, how do we protect that protected swing? Well, we protect it with another protected swing, right? So if price is unlikely to trade into a specific low, the area becomes a logically defined zone, which we should avoid, and that's usually defined by another protected high or low. So applying this protected swing concept is that a weekly high or low is typically defended by the subsequent day's highs or lows. They're supposed to be or lows. So basically, if Tuesday creates the high or low week, for example, let's say Tuesday creates the low, right? Wednesday, Thursday, and maybe Friday, but obviously Friday would be a TGIF possible condition, right? So we should see Wednesday's low, being protected and being higher than the Tuesday's low, and so that should be defended, right? So concepts for daily profiles, I did talk about this a little bit over the last two classes that I had. So midnight open is the most significant time for the daily power of three. This is what you consider the true daily range, because a daily range only happens within a new day, so that's midnight. And obviously we want to use the midnight open because we'll be trading within the daily range, and the daily range is obviously a larger range than what you would have, intraday. So larger pie, bigger piece, right? London session, the ideal profile for a London session is London session trades below or above the midnight opening price, taps a level that's equal to or greater than the 1 hour, and gives us a 15-minute trading stay. The reason why this is the most ideal profile is because if it gives the idea that New York will just straight up continue, and we are already trading away from a high or low day. So, New York should be just straight expansion, right? The other profile, which is not the ideal profile, is New York creates the higher low day, and that's not as ideal because, well, one, we don't have that much expansion confirming that protected higher low, and also mainly because we're taking up more time in the session, right? Because obviously we're going to take up time in the session in the kill zone to create that protected higher low, so we have less time in a good time window for us to trade away from that, right? And then, so the New York session, when London consolidates, or a possible double purge, I will go into that in more detail in a later class. But basically, it's when you take two sides of the range and we engineer liquidity. So ideally, what happens is London generates liquidity to fill New York's volatility. Say requirements: New York trades below, above midnight opening price, key levels, and ideally is usually a key open of New York, so 8:30, 9:30, and U.S. news. Right, so this is a less ideal profile. This is a more ideal profile. So seek and destroy. This is the time where you do not want to be trading. Characteristics, right? In expanding market, we should see manipulation of either buy side or sell side. We should not be seeing manipulation of both sides in the market consistently, right? We should just manipulate a high or low and expand away, right? That is classic expansion. However, when you see and seek and destroy, you'll see reversals from both buy side and sell side. So that is extremely tell sign of the seek and destroy market. Focus on previous sessions and previous day highs, right? If we see a reversal from London highs, but then we see a reversal from like Asia lows, right? We don't want to see that. We want to see those levels get tagged, but just displaced across. We don't want to see sweeps off of those levels. Key opens don't expand, right? The main reason why we focus on key opens is because they are high probability times where we expand, right? 8:30 news, 9:30 New York Stock Exchange open. If those key opens don't expand, realistically, like what else can expand the market? Like nothing, right? It's either news, 9:30 open, 8:30 open, possibly, right? Unless like Trump tweets in the middle of the day, then all shit goes loose. So that's basically why we use key opens. So that's a very telltale sign. If our key opens don't expand, we know there's probability that nothing else can really expand the market. Other characteristics: we're around midnight open, right? That just shows lack of displacement because smart money wants to buy above or below that open. So if we see multiple times of us coming back to midnight open, right, in a small range, it's very unlikely that smart money had actually entered in that location, and it's most likely just a seek and destroy day. Also, if you see any, very short, obviously we're seeing very small ranges, but in those small ranges, there are very short equal highs and equal lows in those locations. So in those locations, that basically means that, with you basically seek and destroy is us coming to low-hanging fruit again and again on both sides of the market. So you can't have seek and destroy without obvious, easy to digest liquidity pools for the algorithm. So that's basically seek and destroy. Usually you find these on days with no red folder news, and with all these characteristics I just applied. So profiles and market maker models. So this is my bread and butter in my model. Higher time frame candles are basically just lower time frame market maker models, right? So I'll quickly explain that. So why market maker models must exist inside of higher time frame candles, right? So in every single candle, we see price seeks liquidity, creates displacement, retraces to rebalance inefficiencies, and deliver to the draw. That's literally what market maker models is, right? Seek liquidity, that's the key level for our smart money reversal. Create displacement, that's our smart money reversal. Change in state of delivery. Rebalance to inefficiencies, right? That's our first stage, second stage market maker models, right? First stage, second stage, reaccumulation, stuff like that. And then deliver to the draw, that's basically the finish of the market maker model. We target the original consolidation and all the engineered liquidity, right? So if you look at on a daily candle, right, that daily wick, right? So on that daily wick, that is liquidity rate, right? That is a sweep of liquidity, that putting together that wick, right? Remember our AMD, accumulation, manipulation, right? That's a manipulation, that lower wick. And then the displacement body, the majority of the body is expansion. And you can see how we retrace into imbalances, we turtle soup, stuff like that, right? So every single higher time frame bar is mathematically constructed through this lower time frame sequence. So I will show that in a little bit, right? So basically where this all comes down to is our weekly profile. Our weekly profile is our 1 hour market maker model. And the cool thing about weekly candles is that they're often continuations of the other. So it's not like every single weekly candle is going to be a reversal, right? Sometimes it will be continuations. So when this happens, there will be a smart money reversal on the given weekly scale. So for example, if we put in a low on Tuesday, right, from Monday's high to Tuesday's low, there's that small market maker model inside of there, but then it's also a continuation of previous weeks, right? So I'll give you an example of that once we're done. Our daily, so this is mostly for bias, so that's why you can see most of the times they are continuations. The other two, the daily profile and the other profiles I'm talking about in the next class, will be more of intraday stuff, so you don't really have to worry about continuations. You can just worry about the liquidity that is rested. So our daily candle is a 15-minute market maker model. Often it will be finished prior to New York session. So afterwards, I would focus on the 1 hour market maker liquidity and the other market maker models I will be talking about in the next class. And then why is this good? Because it gives you easy draws on liquidity, right? We can easily identify where our liquidity is. Easy draws on liquidity. We know where prices wants to go because we want to target those engineered buy or sell stops. All right. So this is homework for y'all. Basically, if you want to do this short, if you can post it, if you want to do this, it's actually very helpful. You can post it in the Study ICT channel, right? So basically, study this week, use what I talked about, ask me questions, of course, and then go back and backtest weekly profiles and daily profiles. You can kind of see how they work. And then, so now we're going to study last week's price action and to really give you guys a real idea of what this is like. So we're going to transition into that. So I'm going to share my screen. We're going to go into TradingView, right? So first thing we're going to talk about is kind of how we were talking about how a weekly candle can just be a continuation of the other. So as you can see, this weekly candle, right, this is Monday the 17th. From this week was a reversal, and then the next couple of weeks, as you can see, were continuations of that same day, right? So I'll show you how this works. So this is the 4-hour time frame, right? So we have this 4-hour swing low, right? And we sweep it. We create a change in state delivery higher, and this is. I should pop down to the hourly. This is Friday, right? So you can kind of see this is what I was talking about, how a Monday high or low of the week is often created from a Friday reversal. So obviously reversals on Friday, right? So if I go back on the weekly, the next week's low was created on Monday, right? So Friday's done, right? And then Monday comes around, right? This is the weekly open of last week, I believe. And as you can see, Monday creates the low, right? Because we already had a reversal here. We rebalance into new week's opening gap. We rebalance coming here. We have a change in state delivery, right? So this is our new week opening gap. We have the 1-hour change in the state, right? So this should not be traded upon, right? We should not trade into this level. And then you can kind of see how the next couple of days, how Tuesday, how this low never gets touched, and how each individual low of day, all the way up until Friday, has been protected. So every single day's low is protecting this low, right? Protected swing, protected swing, protected swing, and this kind of shows you how each protected swing is protecting the original, which is actually down here, but also the weekly low. So and then so we can actually kind of study this day, how this is actually a seek and destroy day. This day, I'm pretty sure I had no news, but you can also kind of see how we have no obvious reversal, right? We're in a small range. If I go down on a lower time frame, you can kind of see the buildup of equal highs and equals lows, right? Equal highs, equal lows, equal highs, equal lows. And then as you can see, we're kind of taking, buy side, and we're also taking sell side, right? With no clear reversal, clear seek and destroy day. And as you can see, our New York Stock Exchange Open has failed to reverse or to push price above. Once you see this New York Stock Exchange Open do this, well, you kind of know that Key Open doesn't want to do anything. So that's why we get seek and destroy day. And then I'm also pretty sure this is the day where we had the CME shutdown thing, where we didn't have a London session. So that's basically, so going back to this, as you can see, this is the case of a Monday low of week, right? We have the Friday reversal, Monday continuation, and then we can study this week. We can study this week's weekly profile. So this is the weekly open, right? So this is another Monday low of week, right? And this is another thing where if Monday takes out Friday's low, that's another sign of a possible Monday low week. So Monday we move the lower into a key lower, right? We have this daily bullish fair value gap, and we tap 50% perfectly. Well, not perfectly, but close enough. And then once we do that, we have our inversion suspension block, right? This is an inverse fair value gap. This is just a suspension block because there's two volume imbalances on both sides of this fair value gap. And this is so this low should be protected. As you can see, each daily low has kind of protected, right? Daily, right? Wednesday, Thursday, Friday, right? Each low has protected this low as that. So this is also where TGIF came into play on Friday. So this entire move right here was TGIF, not this pump up, but this entire move lower, right? So if I take out a fib tool and I take out to where the weekly range was, which was this London high, and I put it to this weekly low, what's going on? No. Okay. So we put it on this where the weekly range was, not this high, because during this time this was the weekly high, and then we put it to the Monday low. As you can see, 20%, 30%, that's what we're targeting, right? And we can kind of see how all this has happened, right? So as you can see, we have an hourly swing high right here, and that gets rated. We also have a very large bearish fair value gap here as well. So we sweep all that, we come down lower, and we tag 20 to 30%. Personally, I did not trade this because I only trade 9:30 post. So I saw this move and I was like, okay, this is probably TGIF, and then we moved higher, obviously. So that's TGIF, and then later on, we expanded higher, and then the last thing we'll go over is the daily profiles. So we'll go over 2 examples. So Tuesday was obviously the ideal profile, right? London creates low of the day, and by taking out this short-term swing, right? And we also rebalance to this long wick, right? This very long wick. Wicks can be used as imbalances as well, but I mostly focus on this low. We sweep this low, and then we get the 15-minute change in the state of delivery, right? We sweep this low, 15-minute change in state of delivery. We have our market maker buy model, right? Original consolidation is here, right? You can see this consolidation here. And, as you can see, we do finish it at 6:15, which was what I was talking about. The most of the times this market maker model is finished prior to New York. So that's obviously not as good, right? Ideally, we have some open draws on liquidity prior to New York, but in this case we don't. This is the ideal profile. We sweep out short-term low, change in state delivery, we move higher, and so, right? And then this day was, I'm pretty sure, Microsoft News. So that's why it's such a big dump. But I was actually bearish this day. I was looking for shorts. I thought this was gonna be a reversal of the weekly candle. But then we can do this day, the TGIF day, for a New York reversal. So, bullish, right? TGIF, counter trend, right? We did hit 30%, so usually we don't continue too far after that. We sweep out this 1 hour low here. We sweep out that low, right? Sweep out this low. Sweep out that low. 15-minute change in state, right? This is what I was talking about. Big. This manipulation leg, so we can use the inversion here, but that doesn't really matter too much because we got the inversion and the change in the state delivery at the same time, so that doesn't really matter. So after this, right, our market maker model is here, right? This is London can be our original consolidation, right? So we have this high here, and then we had these two relative equal highs here. So that's our 15-minute market maker buy model, and we did have 10 a.m. news in here, which also expanded. So this is very nice, right? We see 9:30 expand, we see 9:45 expand, we see 10 a.m. expand, and then we have a big sell-off here as well. So that's basically it. That's all I really got for today. Some quick studies and stuff like that. If anyone else has any questions, I will allow any questions right now. So yeah. So if anyone has any questions, you can type in chat, or you can raise their hand, and I'll let you speak, and I'll do my best to answer. All right. Oh. Yo, what's good, man?
Welcome, bro. I had a question related one of the examples that you showed us on one of the slides. I think it was regarding when you said this is CISD, but it already passes by too long. I saw that slide on
Oh,
your
okay. Yeah,
18th
I know what you're
slide.
talking about.
I had a question on that one, if you're able to pull that up, possibly.
Oh, yeah, I can do that. Easy.
Cheers,
Okay,
Magic.
we can do that. Is it this one? I'm pretty sure it's this one.
That's the one right there.
Yeah. Yeah.
So I was looking at the example, and I think possibly I might have taken that trade as well, because I think something similar happened to the charts this week.
Yeah, this is a recent price action. I don't remember exactly. It's like the 11th. It's November 21st, 2025. I do have the date pulled up on there.
So basically, regarding that chart over there, I see that you put down CISD on the previous high, but the next lower high that got made that wasn't able to break down.
Okay, yeah, I
This
see what
high
you're
right
talking
here.
about. Yeah, I see that.
Basically, once I saw the displacement candle going straight above it and close with a body on top of it, I've considered that as a CISD, even though it didn't sweep liquidity. I thought it's more of a continuation and just a massive expansion, pushing higher. So on the close of that candle, that's where my entry was, considering that was CISD. And then afterwards, as you can see, it started wicking, went up a little bit,
Yeah.
but it came down to sweep that exact level where my
Yeah.
stop
Yeah, I
loss
see
was
that.
placed right under that low, and
Yeah.
wicked it out, went straight up. With
Yeah.
regarding CISD, is it not? Is it usually better to consider the candle or the leg that's sweep liquidity, or is that just like a just one of those things that it pushed you out this time, but it's actually all right?
So something like that. I personally like the full manipulation leg off of a key level, right? But as I talked about, how we have that inverse for value gap that came in earlier, right? Because this is a very large manipulation leg. So you could have taken that. I think that's still valid if you consider the inversion for value gap as your initial change in state delivery. But I always focus on my higher time frame level first, and I'm always looking at that leg only. But obviously, it's still a valid trade given that we did have signs of a change in state delivery with that inversion fair value gap, and then you could have taken the CISD. Personally, I wouldn't have taken that trade because I felt like my stop loss would be too high. I feel like. But honestly, there was times to re-enter. You could have re-entered like somewhere around here, and then you still would have made a profit. So, yeah, I think it would still
Like
be valid
the
if you
only
consider the
reason I
inversion for
didn't,
value gap.
sorry, the only reason I didn't consider taking that trade, or what's it called? Basically, the first one is the leg that it actually goes up first, where you say the inversion happened.
Yeah,
It's if you look at the very top of it, it's actually gone into FV a fair value gap,
yeah, I see
and
that.
it's
Yeah.
respected before it pushes down. So the top of this candle here, the
Yeah, I
white and
see.
the black
I see
candle
what we're
right on
talking
top.
about. Yeah.
So
Uh,
if I put down a fib on it, it's actually like 75% extension or whatever, like the golden pocket they call it,
oh
that
yeah, I know
one.
what you're talking about.
So when I draw that out, I thought it's literally just gone back, respected that area, and it's pushed down. The reason I traded that is when I saw that massive displacement. And again, I think because of the stop loss, I didn't want to put it too low because then the RR gets affected.
Yeah. Yeah.
Because I usually just try to go for two RRs.
Yeah. Okay.
I
Yeah.
think that's it. But I think, like you said, it's just one of those trades at the moment that it just happened that day. But overall, it's like considerably okay to usually go for these kind of trades.
Yeah, I think your trade was fine because the manipulation leg was so large that like the inverted fair value gap was probably your best change in state delivery idea, right? And then you move that higher. I would have put the thing is I would have taken the trade just because like the stop loss would be pretty bad if you just take it off the displacement candle, right? Um,
Got you.
so So I think what I would have done was probably not taken the trade or waited for the retest of the order block, and then you probably would still have gotten stopped out, but there's still re-entry opportunities afterwards, right? Like in the charts. So I think honestly you did everything pretty well.
It's just one of those trades. It's like you win
Yeah, it's
some, you
just one of
lose
those
some.
trades that didn't work out, but there's still more opportunities later on. So
Right, understood. Cheers.
yeah, yeah. So if no one else has any other questions, I will upload the recording on YouTube, and then uh, I'll just actually drop the slides as well because some people are asking for that. So no one else has any other questions. I hope y'all have a good day. And yeah, so. Yeah. So, all right. So I guess no one else has any other questions. If you guys have any other questions, when you guys studying over the week, you can always just at me, and I'll do my best to answer y'all. So, enjoy y'all weekend, enjoy y'all Sunday, and I'll see y'all later. Peace.